Startup valuations are now at an all-time high. And the average late-stage private company, meaning the ones that are almost ready to do an IPO, the average late-stage company has a valuation close to $1 billion. And the average earlier stage valuation is now over $100 million. It's unbelievable. And a couple of things have actually led to this record high valuation. The most obvious one is the fact that interest rates are artificially low. And if rates are basically zero, it actually forces investors to not leave money in the bank, but to invest instead in all non-bank asset classes like stocks, real estate, and riskier, less liquid private companies. And the Federal Reserve has no bullets left to stimulate the economy because rates can't go any lower. And there's only so many stimulus packages that the government can create. And the government doesn't know what's going to happen with Delta or other COVID variants. And if they raised rates too early, then the impact could be devastating. The alternative is let inflation creep up, which is less devastating than raising rates too early, just given the unknown impact of the Delta and now Lambda variant. And the inverse of this actually took place in the early 1980s, when inflation was way worse than it is right now. And the Federal Reserve had to raise interest rates to about 20% in the early 80s. And what happened then was, of course, people left their money in the bank, in order to make 20% risk-free. And back then, nobody bought stocks, and hardly any private companies got funded in the early 80s. Now, the second thing leading to record high valuations of private companies is that mutual funds and hedge funds are really frustrated with private companies, because what's happened is wealth creation has moved from the public markets to the private markets, because many private companies are waiting much longer to go public today. So instead of a private company doing an IPO at a valuation of $1 billion, they wait and they go public at $10 billion. And so there's less upside in the stocks when they go public for hedge funds or mutual funds to profit. And hedge funds and mutual funds do incredibly well when it comes to IPOs as well, or they have traditionally. Because what happens is the big prime brokerage firms, like Goldman Sachs, Morgan Stanley, UBS, etc., a lot of their clients are hedge funds. And what they do is they give their hedge funds great allocations in IPOs so they can hopefully generate alpha. As a result, what's happening now is many mutual funds and hedge funds are investing way more money today in private companies than ever before, which is driving up valuations a lot. And 40% of all late-stage investments are now done by mutual funds and hedge funds, meaning non-traditional venture capital firms. And you saw that recently with Fidelity investing a lot of money in Reddit at a valuation of $10 billion. Now, the third reason why we have record high private company valuations is because of the massive boom in cloud software companies that continued to disrupt traditional business models. And as venture capitalist Mark Andreessen once said, software is eating the world. And now that we have deflationary cloud service provider platforms like Amazon Web Services, Google Cloud, and Microsoft's Azure cloud offering, it's much cheaper and easier for anyone, anywhere in the world to start internet companies.